Right, since we have quite a dense agenda today and two very interesting guests and a very hot topic, I suggest we get started with today's webinar, which is actually the fourth webinar on the CSDDD. And this one is a look behind the results of the Trilogue negotiations. So in the middle of December, we had a successful political alignment at the Trilogue negotiations, and to give us some color and a look behind the outcomes of the negotiations, we brought Greta Koch in today's webinar. Before we enter the round of introductions, maybe a few logistical points. So the webinar today is recorded, and we will share the recording afterwards with all registered participants. We will also share the slides with everybody afterwards. In Zoom, you have a Q&A section that you can enter, and feel free to ask questions during the webinar. We will try to get to them at least at the end of the webinar, but wherever it makes sense, also during the webinar. And with that, I would say we jump right in. So today's agenda is to have a look at the Trilogue negotiation outcomes. So what has actually been now aligned on a political level. Then have a short look at an implementation timeline, more from a practical standpoint. What can companies actually start with today or as soon as possible, and then enter the Q&A section. And since we have a new guest today, Greta Koch, technical negotiator for the European People's Party on the CSDDD, I would like to first of all welcome Greta to today's webinar and ask you to first of all introduce yourself and maybe give us a bit of an understanding of what actually your role is as technical negotiator on the CSDDD.
Yes, thank you. Hello, everyone, and thanks for having me. So yeah, I'm the technical negotiator because I am the assistant of Axel Voss. Axel Voss is a member of the European Parliament and is in the EPP group and is the shadow rapporteur for the due diligence directive. So this entire process of this file has already been going on for a long time. So with my boss, I've been working on this file already for 3.5 years now. People always focus on the political level, so where the commissioner and the member states and the members of the European Parliament come together and come to an agreement. But behind these political trilogues, there's always a technical level. So there's almost daily for already a year, we had negotiations among the technical levels, so all the advisors and the assistants that try to go through the text have to discuss every single word of the file and have to prepare the political agreements. So we are kind of the background work that goes on literally every single day, sometimes 8 hours a day. So that's my role for the EPP group.
Great. So I guess we couldn't have asked for a better guest in today's webinar to give us some background information. Of course, also joining today's webinar is Sebastian, a longtime partner in these webinars. Please introduce yourself as well, Sebastian.
Yeah, thanks, Harald. So my name is Sebastian Runz. I'm a lawyer at Taylor Wessing in Düsseldorf, and I'm probably the least important person in today's round, since we have Greta here who knows all about the CSDDD. What I can do, maybe what the politicians are not allowed to do, and the lawmakers, to share my opinion on the one or other provision and what I think the results of the outcomes will be.
Great. Yeah, again, thanks for being here, Sebastian. So what we will do now is basically step through the outcomes point by point. We will start with the timeline and transposition, move on to the scope of application, and then touch all of the other points, including the risk assessment, the climate plan and financial sector involvement framework. And to get started, we want to have a first look at the timeline, which has now been finalized, at least when it comes to the rollout of the law and the application of the law. So maybe Greta, if you could maybe give us a bit of background information first on the development of the law, then what was aligned during the Trilogue negotiations, and where do we stand now, and where is it now going from a timeline perspective? Yeah.
Yeah, so you can see here also the German timeline, which I think is a bit more well known, but while the Germans were already discussing the law, there was already preparatory work done in the European Parliament and the European Commission to come to a European directive. And so what you can see here is that the Commission first proposed a draft after actually the Parliament had its first initiative report on this file. And then the Parliament adopted a position as well as the Council. So after the Commission released its first proposal, you had discussions among all the 27 member states, which took about half a year. And at the same time, you had discussions in the Parliament among 7 parties, which actually took longer than the Council. So that was already quite politically heated. And since we voted those mandates, so you had 3 different texts, kind of. You had the Commission proposal, you have the mandate of that all the member states agreed on in the Council, and you had the Parliament's text. Since then, we've been in trilogue negotiations, meaning that those 3 institutions negotiated together, and we have come to we call it a provisional agreement, although it was actually quite a secure one already. Where we came to terms with what the final result should look like. This is an agreement with mostly the presidency of the Council and most of the parties. So it's not completely secured yet that everybody will also vote in favor of this, but we do hope that we have majorities to pass this soon. So where we're at right now is that since we had a political agreement in December, we are still working on the technical level to put everything in writing that was agreed on the political level, to work out all the recitals, all the details of the text. And we should be done with that already next week so that we can vote this in Parliament in the first step in the committee in February. And then we should vote it in Parliament probably in April. And here, of course, it depends whether the political majorities stick. But if we have a majority for this text, and when there is a majority for this text also in the Council, then it's officially adopted. And after it's adopted, the member states, since it's a directive, get 2 years' time to implement this directive into national law. And then we decided to give companies 1 more year in order for the first companies to actually having to implement this, because after the national transposition, companies, of course, need to take their time to work with the text that was adopted on national level. And so if everything goes well, the first companies, which are the largest ones with more than 1,000 employees and 150 million in turnover, should adopt this. So that would be 2027. Then the next year, those with more than 500 employees and 150 million in turnover. So then we're in 2028. And then the next step would be the smaller ones, which are covered if they work in high-risk sectors. So that's more companies with more than 250 employees. That would be then 2029. A question here that is often asked is also about the guidelines that should also be adopted, because, of course, we have a text, but it's very open to interpretation. And the Commission has its role to really come up with guidelines on how to do this so that companies know what to do. This should be ideally be done within the first 2 years, maybe a bit longer, but definitely all the guidelines need to be out at least 6 months before the first companies have to adopt this.
Mm-hmm. And the legal text, the finally aligned legal text, when can we expect that to be available?
Yeah, so we vote the version that we're working with now in February. So there will probably already be a text by February. But the really official consolidated version that goes through lawyer linguists, that goes through the translation and so on, will be available in April when we vote this in the official plenary in Strasbourg.
Okay. Great. Then let's move on to the next point. And here I want to ask Sebastian to kind of lead us through the scope. So this is now the question, who's actually affected by the law? I think a very important one. So Sebastian, what can you tell us?
probably one of the most important questions for a lot of companies right now. And Greta already gave an overview on the different thresholds in the CS3D. And when we compare it to the German Supply Chain Act, we can see, of course, there are much more companies falling under the scope of the CS3D. I don't know what the latest estimates are, but the ones that I know say that when you look at German companies, around 4,000 or 5,000 fall under the scope of the German Supply Chain Act. When you look at the CS3D, that would be around 15,000 in Germany and 50,000 in all the EU member states. So you can see the scope is far more extensive. And what we can also see is, apart from the different thresholds of employees, that in the Trilogue version, the high-risk sectors are again included in the text. And another interesting point mentioned at the bottom of this slide, that the parent company may also fall under the scope of the CS3D, meaning that we have a certain extraterritorial application of the CS3D, and that's the other aspect. Parent companies are allowed under certain circumstances to fulfill due diligence obligations for the entire group. Of course, it can get really tricky when we look at different cases for the scope of application. Just to give you some ideas, we built 3 different cases. So when you look on the left side, what we would need to do first is look at the individual entities of a group and see whether the individual entity reaches the thresholds of employees and turnover. In our example, that would be an ultimate parent company in Italy and a subsidiary in Germany. And there are other EU and non-EU entities that do not fulfill the threshold, so they are not directly in scope, but the ultimate parent company would need to consider the risks in those subsidiaries as well. Meaning, in our example, the parent company in Italy would need to look into the German company with only 100 employees, and also into the French and the US entities that also do not directly fall into the scope. So another question, of course, will be, and that's not 100% certain at the moment, whether the parent company also needs to look at the suppliers of those subsidiaries. The wording is not entirely clear in the current version, and we have to wait until we have the final text, because there it's written that it differs and depends on whether those suppliers belong to the value chain of the parent company, and it's not clear when you would consider a supplier belonging to the value chain of the parent company or the subsidiary. So we have an uncertainty here, very important question, because from this question, the scope depends. But I think as a takeaway from the first example, you should basically remember, you start looking at the subsidiaries first, and then there is another option that the entire group falls under the act if the parent company reaches the thresholds, because then the company, the parent company, needs to look at basically a lot of subsidiaries, even the ones that do not fall within the scope themselves. So the second case illustrates that we have a US ultimate parent company with subsidiaries in various countries, EU countries and non-EU countries. And for that parent company, we would basically only look at the turnover, and then depending from the turnover, we would have to decide how far-reaching the due diligence obligations are. So again, the interesting fact of the second case is that it might happen that we have a parent company located outside the EU that doesn't only need to look into their EU subsidiaries, but basically their subsidiaries on a global level. Meaning that if you have an ultimate parent company in Japan or in the US, it might be the case that this ultimate parent company needs to look into all the subsidiaries worldwide because of the CSDDD and not only into the European company. So that's may lead to a massive extraterritorial obligation. So again, if you go into detail, it can be quite complicated, but maybe for now, since we do not have the final text yet, you can remember that the scope of application can be quite far-reaching.
One question that I see coming up is that when it comes to the application to non-EU, so third country companies like we have here, the US company, is this the same phasing that we have for the European countries, meaning from 2027, a US company with more than 150 million euros in revenues would fall under the scope. There's no additional phasing for non-EU companies. Is that correct, Greta?
That's correct, because there are no employee thresholds for non-EU companies, so it's just about the turnover, and the first step includes those with 150 million turnover. So for non-EU companies, there's actually no phase-in.
Mm-hmm. Okay, great.
But I also see that they ask whether to report on 2026 or 27. It's always the year after, so 2027.
Mm-hmm. So the first report would be in 2028 for 2027, right? Mm-hmm. All right. Moving on to the next topic, which I think we saw some interesting changes actually. We highlight these changes here in blue, those that are new, and in a strike through those that were kind of removed from previous versions of the legal text. So maybe Greta, if you can run us through the penalties and sanction regime and what has changed in this political alignment.
Yes, indeed. So there was a lot of discussion on sanctions, but basically it's very basic principles of penalty regime. So you have a threshold, which is quite new in the European single market, because usually member states do not want to agree on this. But what we have here now is a so-called maximum sanction of minimum 5%. So the highest possible sanction in a member state should at least be 5%. Meaning that there's, of course, a lot of leeway around this. You can, member states will most likely not always apply the highest possible sanction. So there will also be a lot of sanctions below 5%. But if the member states wants to go beyond that, it can also do that. It's just a kind of a turn for companies, for member states to say, okay, the highest possible has this threshold. There were a lot of discussions about especially not putting products on the market anymore because of sanctions regimes. There was discussion on trade bans. There was discussion even on criminal sanctions. All of those things are no longer relevant. They were in the Parliament's text, but they are no longer in the Trilogue agreement. And also regarding directors' duties, so any personal responsibility for directors was deleted. So all those points are gone. The civil liability regime itself is also quite clear-cut, I would say, although, of course, people tend to disagree on that. But civil liability now very clearly says that you should be liable where you yourself, so the company itself, caused the damage. So there's direct causality, and where there is intent or negligence. So those are the qualifiers for civil liability. This is also more strict, I would say, than what was originally in the Commission or the Parliament's text, for those who know these texts. So it's quite similar, I would say, to actually what's already happening in German law, although, of course, the German Supply Chain Act doesn't actually talk about civil liability, but it's just status quo. So there was no reversal of burden of proof. That's also a very like a question that's often asked, but this is no longer part of the discussion. The only point in terms of access to justice for victims is that the limitation period should be at least 5 years. This is different from German law. I think that's 3 years, but you can correct me if I'm wrong. So the limitation periods for some member states have been extended. There are actually a lot of member states that have much longer limitation periods, especially in the East. A lot of them have 10 years, so it should be at least 5.
All right, moving on to the next point, which are the due diligence obligations. Sebastian, can you give us an overview here?
So the due diligence obligations, the structure of the due diligence obligations basically remains the same. And we can see it is very similar to what we have in the German Supply Chain Act. So the basic structure of a risk analysis, of preventive and remedial measures, a grievance mechanism, monitoring, and reporting is the same. An interesting new aspect that came out of the Trilogue negotiation is that Articles 6, 7, and 8 are fully harmonized, meaning that member states cannot deviate from what is regulated in those provisions. And maybe also another interesting aspect for the ones that do not know yet, we do not need a separate report under the CSDDD, at least as long as you also fall under the CSRD. In that case, you only need to report under the CSRD what you have done under the CS3D. So there is no double reporting. And then another question that came up just recently, is there going to be a separate reporting under the German Supply Chain Act? To my knowledge, there is still this due diligence obligation of reporting to BAFA in a separate report. There has been discussion, there has been media reporting on the reporting obligation being waived under the German Supply Chain Act. We don't know what happens. BAFA still publishes information on its website that a report needs to be submitted by the end of May, typically by the end of April of each year, but this year the deadline is extended by 1 month. So in June, BAFA will start to review the reports received. And it makes sense for the moment because the companies already dealt with the questions asked in the BAFA reporting. If you would now change this to a CSRD report 2025, I think this wouldn't make it more easy for companies, but more complex, also because the ESRS structure is different than the German Supply Chain Act structure. But of course, we have to wait what comes up next, but for the moment, I don't have any knowledge that German companies wouldn't be obliged anymore to submit a report to BAFA in this year.
One follow-up question, which also touches upon an audience question here, is that, of course, given that this is a directive, member states will now have to transpose this into national law, and they have some flexibility around being more stricter, so going beyond the CSDDD. But I think, Greta, there's here an area where there is what's called full harmonization for some of these articles. Maybe you can explain that and what the idea is behind it.
Yeah, indeed. So since member states have 2 years to come up with a national law that is based on this directive, there was a lot of discussion on full harmonization because companies obviously have supply chains across borders. And so it will be very difficult for multinationals to apply this in 27 different ways. So the idea is that we have a full harmonization of Articles 6, 7, and 8. And those are the articles where you can see here that touch upon the entire due diligence process. And here, full harmonization means that the translated text has to be the text of the national law. So there's no divergence from the text that we have agreed. Member states cannot add to that, they cannot change it. So the identification and which measures you need to take and so on cannot be changed. This will be the same in all member states. Ideally, we wanted to have this for the entire text, obviously, but this is legally not possible. But at least we've secured that the due diligence process itself is the same in all member states.
And maybe thinking now through a case of Germany, where there's already a law in place, that the German Supply Chain Due Diligence Act. What do we expect that the German legislator to now do? So they will be adapting the German Due Diligence Act towards the European standard. Is there any likelihood they will do this before 2027, or what's the expectation here on the kind of timeline for a German company?
I think the adaptation, since it's more about like they have 2 years time, and usually they take those 2 years. I don't think that they will adapt this anytime sooner, but they have those 2 years. So by 2026, they should have adapted their law, and they need to, so to say, replace the articles that are relevant to Articles 6, 7, and 8 with those of the directive.
All right. Okay, so moving on to the next point. So I think one, of course, key area of deviation between the CSDDD and the German Supply Chain Act is the scope of the risk assessment, and let's say the scope of the value chain that is covered. So in the German law, we have a strong focus on the tier 1, so the direct suppliers and the own business area, and the sub-tier, so the tier N suppliers only in case of substantiated knowledge. In the CSDDD, we had, I think in the Commission draft and in the Parliament draft, the definition of the value chain. And now this has been changed to the definition of the chain of activities. And we will try to bring some examples, but maybe Greta, from the very beginning, can you comment on why this change? What's the reasoning behind it? Where did this come from?
Yeah, so I think there was always a long discussion whether to call it supply chain or value chain, because of course there are different definitions depending also on which sector you ask. What is the difference between supply chain and value chain? A lot of people said that the difference would be upstream and downstream is value chain and only upstream is supply chain. That is actually not really the case. So it was more something politically about terminology. And so in order to avoid this discussion, I think the term chain of activities was chosen. In any case, I would say it's similar to the supply chain. So you have to trace where your product comes from, and the downstream parts concern not really like the end user or your customer in any way, but it's more about things like transport, storage, distribution, that are in a way also covered under the German law. So those are the downstream parts, but it's not about actual going further than that.
So again, comparing this more in a visual way or graphic way, and we look at the own business operations, which are of course in scope for both of the legislations. Upstream, the CSDDD extends upstream towards the sub-tier suppliers. And it also extends downstream, but not fully. And maybe to take now one step deeper into what this definition of the chain of activities actually encompasses, we have prepared this next slide here that you're seeing. So the chain of activities is on the one hand defining the scope, also legally in the definition, the scope of the upstream part of the chain of activities. And it is defined as such that the upstream business partners, so in this case suppliers, need to be related to the production of goods or the provision of services of the company in scope of the CSDDD. So that includes the design, extraction, sourcing, manufacture, transport, storage, and supply of raw materials, products, or parts of the products. So we have here a much stronger link towards the actually provided and marketed products and services of a company. And we will get into a few of these examples that, let's say, this clearer definition in that the chain of activities and the upstream supply chain needs to be related to the production of goods or the provision of services gives us now also a foundation to actually rule out some of the upstream sourcing, and we will get into that. If you look on the downstream side, maybe Greta, you can quickly explain, because there were also some changes in the recent negotiations. What is now encompassed on the downstream side?
Yeah, so on the downstream side, you have your downstream transport and storage. and you have the disposal of the product and the distribution if this is done on behalf of your company. So if you have a business relationship that does the disposal for you as a service, then this has to be covered as well. It's not any type of disposal, obviously, because that would be way too open, way too hard to trace, but it's about disposal that you ordered in a way to be done by a different business relationship. So any other discussions that we had on sale, for instance, that's no longer part of the supply of the chain of activities. And we have an exemption that was brought in by the council regarding dual use products and export control products. So here it's about products that could be used different from how they were intended. And this mostly concerns weapons. So this is really about weapons control, because obviously it's difficult to do due diligence on weapons because they would always be a risk to life. So these are exempted from this directive.
And maybe also to be explicit, because I'm reading here a question, it is not the fact that retailers in and of themselves are out of scope of the CSDDD. It's just that if I'm a manufacturing company, my retailers or my distribution partners that I partner with in order to distribute my product are outside my scope of the risk assessment. So if I'm, let's say, a coffee producer and I retail through a large retail chain, I do not need to analyze this retail chain as part of my due diligence because they are, let's say, a downstream business partner that's out of scope. But retailers themselves are obviously in scope for the CSDDD. And maybe, Greta, I think a lot of is hanging now on this word related to the production of goods or the provision of services. So can you maybe give us a bit of a, let's say, look at the intention of the lawmaker? So what is kind of intended with this? What type of sourcing is intended to be included? What's intended to not be included in the CSDDD?
Yes, so the intention really is that anything that is directly necessary for your product to be finished should be included. This is not about any indirect purchasing. This is not about what types of tools you use in your company yourself, but it's really about the product that you yourself have based your business model on. So it's really, yeah, if I sell cars, I have to trace where the parts of my car come from, to put it very simply.
And maybe I can add that, and I think at that point we're going to the next slide where we look at this in detail. But that's a huge difference compared to the German Supply Chain Act, because right now under the German Supply Chain Act, companies need to look at all their tier 1 suppliers. So there is basically almost no filter. When you look at the FAQ of BAFA on the Supply Chain Act, you might read out a certain filter in their answers. But basically what the companies, German companies are doing right now, they're looking at all their suppliers. So if you have 10,000 tier 1 suppliers, typically German companies would look into those 10,000 suppliers and wouldn't distinguish between, is that indirect purchasing, is this direct purchasing, is that related to the product or the rendering of your services, but basically just looking at all of them. So that, because sometimes when we speak of CS3D, people speak of an extensive application and much more work, but that doesn't basically is true for all the provisions. And here we have one example of a provision that is less far-reaching than the German Supply Chain Act and helps you to filter out a lot of suppliers in the first place and really focus only on your important suppliers. But we will get to that.
Mm-hmm. Mm-hmm. So for those of you that have kind of participated in the most recent webinars, this was also a point we touched on very frequently, is considering now putting ourselves into the shoes of a large multinational manufacturing company. And we define here a few upstream business partners, so some suppliers that we are working with, legal services suppliers, so a company where we are procuring legal services from, then a company where we are procuring the coffee we are using in our kitchens. So we are not here a retailer. We are actually just buying this for our employees in the kitchen. call center services and batteries we are buying for products. And I think using this definition of chain of activities and having this point of it, the sourcing needs to be related to the actual products that we sell, and also listening to Greta's intention that is behind the law. The coffee can be clearly ruled out. Legal services is still some discussion. I mean, maybe Greta, you can give some insight into legal services in and out, where your stance is and what you know about that.
Yeah, so legal services as companies themselves are covered by the directive as well. The question is rather, would you say that upstream supplying legal services should be considered here? And there I would argue with a risk-based approach, that you can say that mostly human rights in especially local law firms are applied anyways. There's clear law enforcement in those law firms. And so therefore, under the risk-based approach, even if this could be interpreted in also covering legal services, there's no need to trace it.
Mm-hmm. So really, I think we have to see here, and this is what Sebastian already highlighted, this clear difference from the German Supply Chain Act, in that the intention here is really to relate the sourcing that needs to be considered towards the actual products that are being sold. And that is then also because I see the question here, why again are we ruling out the coffee here? Because again, the coffee that our employees are drinking in the kitchen are not related to the products we are selling on the market. And the same can be said for the toilet papers and the pens that some of our employees are using to maybe sign a contract. This is too far-fetched. But I think a call center service where some of our customers are able to call, this is very clearly related to the services and the products we're offering on the market. And of course, the batteries that are inside and manufactured into our products are obviously clearly related to the products we are selling on the market. So again, I think we will get more and more guidance as we go and when we have the final text. But I think here, at least it's a sigh of relief, I think, to say that the clear intention of the lawmakers is to focus it on the direct purchasing that is related to the actual products or services being sold. But even if we have this first selection now on kind of which suppliers we consider to be broadly in scope based on the chain of activities, we have still another deviation, which is the risk-based approach or scoping approach. And with that, I hand over to Sebastian.
So what we were talking about on the last slide was basically a first filter, meaning that you can filter out suppliers that are not related to your products or to your services. Then the CS3D has a second filter, if you want to call it like that, meaning that companies only need to look at suppliers, own business area, and suppliers where adverse impacts are likely and severe. And if that's not the case, you wouldn't need to do an in-depth assessment. Maybe we can quickly go to the next slide because this illustrates it very well. So when you look on the left side, you can see the German Supply Chain Act. As already mentioned, companies right now basically look at all their tier 1 suppliers, and then on the tier N level, it's only a small fraction they are actually looking in, because the law only requires this in case of substantiated knowledge. And right now, most companies, most German companies, are of the opinion that only in the rarest cases they have substantiated knowledge. For example, if they received a report of BAFA of third parties, then that's maybe the case, but it's only a small number of tier N suppliers companies are looking into right now. On the right side, you can see the CS3D risk assessment, and there we illustrated these two filters. The first one, basically the part, suppliers have to be a part of the chain of activities, and then suppliers need to be looked at where adverse impacts are likely or severe. So this means that even on the tier 1 level, there might be a much smaller number of suppliers you need to look into. But of course, if your business area is connected to risks, for example, you're working in a risk sector that's already mentioned in the scope of application, then of course this might lead to the result that you need to look into more tier N suppliers. This really depends on your business model. If you don't have that many risks, bottom line could be that CS3D requires less work from you than German Supply Chain Act. If you are working in a risky area, then CS3D may require more than the German supply chain. That's just generally speaking, but just to remember that it's not black and white, and German supply chain is not far-reaching and CS3D is far-reaching. It really depends on the due diligence obligation you're looking at.
Mm-hmm. Mm-hmm.
So the risk-based approach on in the CS3D is much clearer than in the German Supply Chain Act.
Maybe, Greta, you want to add something to that, because I think that was something that is quite important to you, that the risk-based approach is strong, and I think all of us appreciate that.
Indeed, but I think Sebastian already explained it perfectly. So yeah, indeed, you have to focus on those risks that are most severe and most likely. I already saw the question, how do you even know how to do this efficiently? We work very closely with the concepts of the OECD. So there are risk factors on which you should base the risk analysis. Those are sectoral level, those are geographic level, company level, product based. The Commission will come up with a list of those risk factors. So we give a lot of guidance also in order to do this properly. And so it's very, very important that, of course, you have to go further than tier 1, but only in those areas where it really counts. And this is very important, that we have bureaucracy only in those parts where it would actually contribute to improving human rights, rather than having to do bureaucracy on suppliers where you actually know there is no risk.
And again, maybe to make this a bit more clear, this is also a chart or a slide we've been showing in the previous webinars, is to now kind of visualize these two filters in the risk-based approach. First of all, is it actually part of the chain of activities? Here we can rule out the coffee sourcing entirely out of the risk assessment. For the legal services, even if we were to say we consider them to be included in our chain of activities, from a risk perspective, meaning are we broadly scoping human rights or environmental adverse impacts to be likely in the legal services industry, we would say no. Yeah, and we would very likely scope them out at that point. So we would also not be required to run an in-depth assessment on our legal services suppliers. And we would also not, because we scope the supply chain of a legal services supplier out, we would also not have to make the supply chain transparent of a legal services supplier. Of course, if we go to the other end of the spectrum, a battery supplier out of Vietnam, we would, based on the risk factors that Greta just mentioned, so the country, the sector, the types of products, we would clearly define that with a very high likelihood this is in scope, and we perceive there to be high risks, both at the direct level, so this factory in Vietnam where we are sourcing from, but also the supply chain behind. So that would be a case where we would be required to map the supply chain. And downstream, when it comes to the actual disposal of batteries, that would also be considered in scope. So here we have a case where we can, let's say, put 3 check marks on the scoping. And of course, this is something where also we at Prewave support. We already have a scoping dashboard, which will be aligned or is already aligned with these risk factors. And if any guidance is issued, we will be adapting also our models and what's considered. So we are also supporting beyond what the Commission is giving here.
And maybe just to clarify one thing, because I saw a question in that direction, it's still, of course, an obligation of means. It's very difficult to get transparency over the entire supply chain, and that's very clear. What we do say is that, of course, you should try, but if you cannot get the necessary data, you declare that. So there's always the option for a company to say, if I can't get that information, I can declare that. And then, of course, there's no obligation to get data that your supplier doesn't want to give you. This is also foreseen in the text.
So the standard of the law is not to have achieved successful full transparency and you can get sanctioned if you don't. It's that you have tried reasonably according to the means you have as a company, right?
Exactly, because there are very famous cases, of course, especially on the Chinese market, maybe that suppliers there are not even allowed to give you information. In that case, you can declare that.
Mm-hmm. Mm-hmm. All right. So I think this is a very important point and probably a point we will come back to time and time again. But still, I think maybe to summarize from my side, I think this is a very big success as compared to the German law because it gives much more clear focus on a risk-based approach. Now looking into the, let's say, next step of the due diligence obligations, which is after we have assessed risks and have prioritized them based on likelihood and severity, we are now required to address those risks. And maybe also first Sebastian and then Greta, maybe you can take us through these changes, because we do see here some changes on this involvement framework, as it's called.
Here we have a difference between the German Supply Chain Act and the CSDDD. In the German Supply Chain Act, you have causal contribution as one of the appropriateness criteria. So in total, you have 4 or 5, depending on how you count them, appropriateness criteria. And depending on those, you decide which preventive measures, which remedial measures are appropriate in a certain case. Under the CS3D, you start with the nature of involvement or the causal contribution, and only in certain cases you have to take far-reaching measures. In other cases, you only need to use your leverage. And in that regard, there has been a changing of the wording. So far, it was the wording that we know of the OECD guidelines, for example, which was cause, contribute, and directly linked, which is an instrument that has been known before, still quite complicated, but at least you can find it in other soft law provisions. This was changed now. Now we have cause, which basically remains the same. Instead of directly linked, we have caused by another business entity, which is more or less like directly linked. So again, no big changes here. The most important change is contribute, which is now caused jointly with another business entity. And this caused jointly would be much narrower than contribute, because contribute also included the case that you as a company facilitate or incentivize another company causing a violation or a risk. And caused jointly wouldn't include that anymore. It would only include you are causing a violation and another entity is causing a violation, but not you incentivizing another company to cause a violation. And that's interesting, because when we look at a lot of human rights violations that you can find in the media, very often the only, let's say, linkage or involvement of a German company or a European company that could exist is basically in incentivizing, because your purchasing strategy was very one-sidedly, because your prices were too low, because the quantities you required were far too high with very short deadlines for low prices. And if you look at the wording right now, it wouldn't be included in the second category caused jointly, meaning that you would not need to take far-reaching measures, no measures to seize the violations, but only use your leverage. Or if you don't have any leverage, try to increase your leverage. But increasing your leverage or using your leverage basically, or very often only contains contacting your supplier and requesting the supplier to end a certain violation, but no far-reaching measures yourself. Yeah? And that's very interesting. We still have to see how this wording, caused jointly, it will be interpreted by courts, because just due to this slight change of wording, it might be the case that European companies, in the end, in most of the cases, do not have to take very far-reaching measures. But maybe, Greta, you want to add on this?
Yes, indeed. So while, of course, in your risk analysis, you should go much further than tier one as far as possible, I would say. Do your best to identify the most severe and most likely risks. In terms of what you actually have to do with those risks is limited based on this involvement framework. So you have to take action where you caused or caused jointly together with a business relationship any harms or risks, and you should mitigate those. So this is an absolute obligation of result that you have to achieve to mitigate this risk. But on anything else that happens in your value chain that you might have identified, you should use your leverage. So again, here you should try your best to use your leverage in order to get to a result, but there is no obligation to actually achieve that, and also there's certainly no liability connected to it. So while we have the risk-based approach, which might, in terms of value chain, go further than what you are used to under the German Supply Chain Act, actually in terms of taking action, it's mostly your tier one, depending on your business model, maybe tier two.
Maybe a question to Sebastian. Isn't this caused by another business relationship, and then the necessity to use the leverage that we have to effect change still somewhat similar to the German approach, in the sense that there's also not a success requirement, for measures you take under the German law? So where would we see the differences here between the German approach and the CSDDD approach?
Well, the difference is that the nature of involvement is the starting point under the CSDDD, meaning that if you come to the conclusion that a certain problem is caused by another business relationship, then you can start right away only using your leverage. Yeah? Under the German Act, you would also look at the other appropriateness criteria, and a causal contribution that is maybe not that strong doesn't automatically lead to only an increase of leverage, for example, because you would also need to look at the other appropriateness criteria, the severity, the degree of influence, the type and scope of business activities. So in the end, it could be the case that under the German Supply Chain Act, even if the causal contribution is not that strong, you come to the result, okay, I need to take this and that measure. Under the CSDDD, your result would basically be, okay, I have to use or increase my leverage, and in using and increasing leverage, when you look at soft law provisions, of course it's not nothing. It still requires you to do stuff, but of course it doesn't request you to implement far-reaching measures yourself. With respect to a certain violations, it's more trying to influence the actual causer to change the situation, to end the violation, but not you ending the violation yourself or trying to end it.
Okay. All right. With one eye on the time, let's go to the last point here from the outcomes of the Trilogue negotiations, one that has also been quite heavily discussed, I think, and heavily negotiated. So maybe, Greta, you can let us know what is the outcome on the climate plan and the financial sector inclusion.
Yes, so the intention of the Commission and also other parts of the legislator was to include climate due diligence. But obviously, you cannot do due diligence on climate risks or emissions in the same way as you do on human rights violations or environmental harms, because those are much more visible, much more clear, and much more easy to define. And so the idea was that instead of doing actual climate due diligence, you have a transition plan, so that companies have to set targets in order to reach the 1.5-degree goal. So this was supposed to be in line with the Paris Agreement, and also have to fulfill those targets. However, after now long discussions, what actually is the case is that, yes, companies have to adopt a transition plan and set targets. However, they already have to do that under the CSRD. So all those companies that already are applying the CSRD already have those emissions data. Maybe they don't call it a transition plan yet, but there would actually be no effective change. So all you need to do is to adopt a plan. However, it is no longer legally binding to actually implement that plan. And it also very clearly says that if you fulfilled the CSRD, you also fulfilled the obligation to adopt a transition plan. I get that question quite a lot, because then why do we even have this article? That question I can't answer. You could just as well delete the article, to be honest. And so we also have, in terms of directors' duties, I said earlier, those were deleted. The remaining one is that basically financial incentives for directors can also be linked to this climate plan, although here again, in terms of bonuses for directors, for instance, there's also no legal obligation to actually set that target. And then I guess the next point would be the financial sector. This originally was also intended to be included by due diligence. And the financial sector is still covered under due diligence. However, we do not define their downstream supply chain. And since for the financial sector, the only parts that are relevant are client relationships, so anything that is downstream, there's nothing left for the financial sector to actually apply. So they have to do upstream due diligence, but any upstream services would not be directly related to their financial services. And even if they are, most likely under the risk analysis, they would already fall. So basically the intention of the member states, especially France here, was to not have the financial sector included, which it effectively isn't, although it's still mentioned in the text. Financial sector has to implement the transition plans or the climate plans, but again, since they already mostly fall under the CSRD, there's not much new for them. So it's a bit of window dressing. We mention financial sectors, but they don't have to do anything.
All right. Let's maybe touch on the second to last agenda point, which is the implementation timeline, giving companies a bit of a guideline of what they might start first and where they might start first with. Sebastian, if you can give us a quick overview.
Okay, so what we did right here, we structured the different due diligence obligations from low complexity to high complexity and severe complexity, and basically looked at the starting point of the CS3D in 2027. So you have from now on quite a lot of time to prepare for the CS3D. And depending, of course, whether you already fall under the German Supply Chain Act or not, this requires more or less time. So when you look at the arrows, some of the arrows are shorter, the orange ones are shorter than the yellow ones, because if you already fall under the German Supply Chain Act, you might have already implemented certain measures and just need to adapt those measures to the requirements of the CS3D, which requires less time than if you have to implement the CS3D entirely. So maybe because we don't have that much time left, what to remember from this slide. So the most important difference, or one of the most important differences between the German Supply Chain Act and the CS3D, is that the German Supply Chain Act mainly focuses on the tier 1 suppliers, and the CS3D also on the tier N suppliers. So if you already know by now that you're working in a supply chain or in supply chains that are connected to high risks, then what you could do right now to start preparing for the CS3D is to make transparent your deeper supply chain. Because in the end, you can only take measures and do risk analysis in your deeper supply chain if you know about the different actors in the supply chain. So that's basically the starting point for everything. So with respect to your high risk supply chains, you could already start to make it transparent. And Harald and Greta, you were talking about it. This could be a lot of work because maybe there is data available to find out about companies in your deeper supply chain, but very often you basically have to ask your direct supplier, and then you receive an answer, and the answer is probably, well, I'm concerned, I don't want to tell you. And then of course at a certain point you are allowed to say, okay, I'm not able to receive the data, but the question remains whether this is already the case. If your supplier says, no, I just don't want to provide you with any data, maybe then you would have to try in a second step to convince your supplier, depending on how many high-risk suppliers you have, this can take a lot of time. So we would recommend to start with that. And for the rest, I mean, you receive the slides after our webinar. You can look into more detail which measures should be started at what point in time.
All right. And with that, we can go into the Q&A section. There's still a lot of questions. I've marked a few that I think are still interesting to address. I think before we go into the questions, maybe to ask Greta, now with the negotiations behind you and looking back at where things started and where things have basically ended up, how would you summarize, the outcomes of the CSDDD and what is kind of your summary, if you could give one?
Yeah, I think the intention is to have something, especially since we have national laws that have practical problems, is to have a law that is less bureaucratically burdensome, but actually achieves more on the ground. And so here we really tried our best to come to an agreement on that. So we really try to reflect the international standards. We really are close to what happened in the UNGPs and on the OECD level. I'm quite happy with how the risk-based approach turned out and also the involvement framework, so that companies have to do their best. But in order to make this a law, there needs to be parts that also have an obligation of result, which are those that you are directly responsible for. And you should, on the rest, try your best, but it's nothing more and nothing less. So it should be implementable for companies, but it should also lead to results for human rights and the environment. And we tried our best to do that. Of course, it has to be seen how this will be interpreted and also how this actually works in practice, because probably everybody has a bit of a different reading on the text. But this is the result we wanted. And I think that, of course, not everybody is 100% happy with the text, but it's, in my view, a very good compromise in that sense.
Excellent. Sebastian, do you want to give also maybe a short summary on how you see now?
Let us assess in hindsight if this is a good law or not. For now, it definitely has advantages compared to the German Supply Chain Act. In particular, the risk-based approach, from my perspective, makes much more sense. But I mean, in the end, it depends on how the directive and the laws resulting from it are enforced. on how the companies actually behave. I mean, we've seen it in France. For many years they had a law which wasn't really companies didn't really care about. Yeah, so I think we have to wait how this turns out on the EU level.
All right, then let's jump into a few questions. The first one that I noted is a question in terms of reporting on risks. How are companies required to assess and report on end users and their customers under CSRD? Or is this not covered because sales is out of scope? So the end users and the customers,
there are no obligations on end users or customers at all, neither on the CSRD or the CS3D.
Yeah, perfect. Then one question again, I think there's a lot that touch on that. Again, this kind of best effort, duty of care versus the requirement to actually do something. Maybe can you again summarize, Greta, where does the law really have a requirement for companies to end a violation or to really achieve an outcome, and where is it more a best effort, duty of care standard?
So it's really about your involvement. So you have to take action where you identified a severe or very likely risk that you are connected to in terms of causation. So you caused it or you caused it together with another business relationship. If it's somewhere in your value chain and you actually don't have any level of involvement, then there you should use your leverage. This again is more of a best effort kind of thing. So you should try to use your leverage on your customer, but this really depends on your context, on how large your company is. I mean, smaller players, we sometimes have players of 250 employees. I think there are players that, you know, don't have any leverage over their tier 6 or their tier 7 or wherever their raw material is coming from. And this is also not expected. It's really about those that have leverage that are supposed to use it, or if you don't have it, you should try your best to increase it. But where you really have to take action is where you caused it, and this is mostly your own operations. For a lot of business models, this is your tier 1, or this can also be your tier 2, depending on your business model. Again, if you think of, you know, if you are a large textile company, for instance, that has a factory in Bangladesh that directly prints the logo on those textiles, then there you think you can argue that this is causation, or at least causing jointly in a way. So for those companies, those business models, of course, you should go further than your tier 1, but this is precisely why we chose this approach, because if you only focus on your direct suppliers, that's nice, but probably the risks are somewhere else.
And the law is, as I understand it, not explicit on how companies are supposed to make their value chains or supply chains transparent, right? Because there's, let's say, a lot of approaches around, you know, inviting suppliers and sending questionnaires, and of course there you might hit roadblocks. Then there's other publicly available sources. We at Prewave heavily rely on customs data, and maybe also media data, so publicly available records of relationships. So that is, as I suppose, fine to use, right? It's not required to ask your supplier all the time, right?
No, it's quite open how to get the data. I think we originally mentioned public reports somewhere, but I'm not sure this is still part of the text. We do mention, for instance, digital solutions as well. So here, how to get the data, companies are quite open, but of course you don't have to take any unreasonable steps in order to get your data. So for instance, as I said, if you ask the supplier and you don't get any information, you're not supposed to become an NGO and go undercover and go into that factory. You know, there's always so much you can do. So any public data, any reasonable data that you can get, you should take into account.
But I think that will be an interesting aspect that has to be figured out, because of course the law can't be that specific, and in the end it will be national authorities commenting on this aspect, whether it's sufficient to just ask your supplier once on information, or whether you have to collaborate with other companies to combine your leverage on a certain supplier, providing you with information. So I think there are no final answers yet.
That's true.
I see here a point that's raised several times is that the CSDDD, as we just mentioned, is not extending until the end users or consumers, but the CSRD as part of the standard S4 does. I guess that is simply the case, right? That the CSRD can have a broader scope in some cases than the CSDDD is. Is that correct? Would you agree?
Yeah, but the standards are being developed right now, and there's no question about your customers' data, for instance. That's not part of the deal. The thing is that there's a supply chain or value chain definition in the CSRD that is not a very clear definition because they were waiting for us, so to say. So the CSDDD will have some form of effect on the CSRD, but since the standards are already being developed, including those for your supply chain, I would not fear that you have to report more than what is necessary.
Mm-hmm. Mm-hmm. So I think still what we also saw in the German case is that the guidance documents issued in this case by the BAFA were certainly, I mean, people argue how helpful they were, but they were certainly clarifying, some of the scopes and definitions in the law. Do you have any idea when we can expect these guidance? You mentioned in the beginning that yes, the Commission needs to prepare them within 2 years, but has this been discussed already on some kind of a timeline? Can we expect some sooner, some later, or is it probably too early to tell at this point?
Yeah, so the guidelines have been divided into those that are absolutely necessary, that have to come within 2 years. This includes any description of the process, so how to do your identification, how to take appropriate measures. All of those points have to come by 2 years. Then there are guidelines, I think, on things like stakeholder engagement and complaint mechanism that can come a bit later, I think. And then there are guidelines, for instance, for companies that are smaller than what is in scope, but still want to do this voluntarily. They can also get helpful guidelines. This can all come later. So yes, there are timelines that are defined that the Commission has to stick to.
Right. Sebastian, do you see any questions that you feel we should address still? I think Greta was very nice in actually answering and typing and then answering a lot of them. So I think with being 12 minutes over time already, I think we can look to end the webinar. We will provide the recording to all of the participants and all of the registrations. We will provide also the answers to the Q&A as well as the slides. And now with ending the webinar, of course, I want to extend a very warm thank you to Greta for participating here. I think it's extremely helpful to get, let's say, a perspective beyond Sebastian and my own, which is an outside-in perspective, and having an inside-out perspective, I think gives certainly a lot more helpful context to what has been discussed today. So yeah. Thank you very much to both of you, but particularly Greta for joining us today.
Thank you very much.
Thanks.
Excellent. So until next time, and there probably will be a next time, thank you very much and see you soon.